Hello traders and welcome to Trading Fractals. This is the inaugural video of my channel. Why? Because I am camera shy and terrified of selfies, but it's time to break free, to break through, and to get after it. So we are going to go through an EMA cross strategy today. Let's get into it. Before we even start, we use this strategy on the 4 hour, the 1 hour, or the 30-minute. The 1 hour is the sweet spot. What we have here is a chart of the Canadian dollar, Japanese yen. We are looking for the EMA cross. The main condition, in this case, we have a cross upwards, price is moving up, 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 up. We're looking to buy the retrace back to the 33 EMA here in yellow. The one condition we have is we need to see a slope, an upward slope on the EMA to make that buy. If we're trading, selling the downside, we need to see a slope to the downside. So in this case, price is moving up pretty powerfully, peaks out up here. As it moves back down to the EMA, notice the EMA is flattened out, so we would not be buying here. It's just too flat. Turns out price did spike up 18 pips, but it's too flat. Now, having said that, without viewing this in real time, you have to realize that, like on this candle here, as this candle's forming, the EMA is kind of flickering up and down. So if we're at the top part of the candle, this EMA is actually going to be pointing up. It's still going to have a slope to it. So it closes down here. When the candle closes, that's when the EMA, closes up till that point. And then with this candle as well. So you have to take that into account, that we're seeing it in hindsight. So in real time, this slope might look a little bit different. So anyways, we don't have a trade there. Price moves down, a huge move down here. Could have been a news event. Don't really care. Price continues all the way down. And notice the cross takes place here. That's a 200 pip move down just to get the cross. And that's what I was saying, is that, other strategies that use, a 7 and a 15 EMA, there's crosses all over the place. And I don't find that useful for me personally. So we're going with the 33 and the 70. So now we have our cross. We're looking to sell the retrace back into our 33 EMA. Price comes up. It comes up 15, 18 pips short. Get that out of there. So we could have entered a trade early. We could have had the FOMO trade, maybe entered a small position and then another position if we got all the way to the line. And this is where it's kind of critical to have confluence indicators or things you use for confluence. Now, everybody uses something different. You might use Fibonacci retracement levels. It might be the RSI, the MACD, whatever it is. I like monthly closes. I like to throw them on there. And so let's go to the chart that has those on there. And so here's the same chart with the monthly closes on here. So these purple lines are the recent monthly closes after the last couple of months. And I have these labeled here with the crosses and the slope's too flat. And here's a good slope here. So in this case here, here's a monthly close that was within the last 2 months. So what we notice over here is when price moved through this monthly close, it kind of stopped for a minute, dipsy doodled, and then it moved up. As it moves back down, we get kind of a little bounce, go through it. We come back right here. You can see that wick. It almost gets to the close and down it goes and back up. So that there kind of validates that there's some support and resistance characteristics to this closing line here. So that might give us the impetus to enter this trade a little bit early, recognizing that there's probably going to be some resistance even if price spikes through it. So having said that, that's up to the individual trader. That's up to how you look at confluence or what factors you might have on your chart. So in this case, it is a valid trade. If we got in early, it's a huge winning trade. It moves down well over 100 pips. So if you didn't take the trade, no big deal. Price moves down, starts to consolidate, and then it comes back up and it comes right back to the line. There's our sell. Notice here and here, the slope is down. That's beautiful. We make the sell. It goes down 80 pips. So now that we know that it went down 80 pips, in hindsight, we'll talk a little bit about our risk management. So how do we determine how much we're going to try for as a take profit? I have a couple things I look at. This indicator here gives me the total pip movement for the hourly candle over the last 21 periods. So you can change the period thing. So this tells me the last 21 candles on the hourly time frame, was 14 pips per candle on average. And as you change the time frames up here, this will change with it. So like I said, you can set this for 40 periods, whatever you want. I also look at this. This is the daily range. I look at the 20-day average daily range, which is 104 pips. So we might be targeting 40% of that. Let's say we're going to go for 40 pips. In that case, we want a stop loss of no more than 20 pips. We want to get 2 to 1, at least 1.5 to 1. So that's kind of how we go about setting up our trade here. We're not looking for massive moves, but we are looking for at least 2 to 1 or possibly 1.5 to 1 on our risk reward. So that's how it works. If we continue on here, we have a cross to the upside. Get that, I have another indicator that pops up when I touch these fractals here. So price moves up really, really strong. It moves back towards our EMA, doesn't quite make it. By the time it does, the EMA is basically flat. We wouldn't have a trade there, and that's it. But the reality is, if we got one good trade like this, that makes our whole week right there. So that's it. I'm going to do a lot more examples of this. And you could always scroll back and look and see what happened. If you notice, there's hardly any crosses. We have to go back another week before we get a cross, and this is an hourly time frame. So here's a cross here, price moves down, it's a nice slope down, boom, sell right on the line. I mean, it's just boom right there. That's a nice big trade. Come back here, we have a cross to the upside a week before that, and here's a good example is without seeing this in real time, we don't know if this was flat or not. It looks flat now. It might not have been a trade, but either way, it bounced up pretty heavily. Here we have another cross on the downside. Looks like it's flattening out here. It did pop down 30 pips or so. Is that a trade or not? We'd have to see it in real time. So I encourage you to go through and just kind of put this template on your chart and just kind of like go through it. Which reminds me, there's a free trade simulator I use. It's called FX Blue. I'll put a link in the description to that. And I'm actually going to do a video on that, a little tutorial on how to use it. It's really simple. It's great. You can just run the price feed, slap on the template you want, and just watch price as it moves through and see, how it reacts to your lines, your EMAs, or whatever strategy you happen to be trading. Also, having said that, this is my first video. I have huge plans. I'm going to do a tutorial series on the Metaphor platform. I've been using this platform since 2007 when I started trading Forex. I love it. Can't stand Meta 5. No reason for me to switch. There's other great platforms, TradingView, CTrader, Ninja. I use Metaphor. I just like it. I like it for drawing. I do a lot of, kind of geometrical things and so forth. So I'm going to put a video tutorial series together on that. I'm going to do my fractal line strategy. We're going to do a risk management strategies. We're going to do the whole gamut. I've been, like I said, trading since 2007 Forex. I traded my first stock in the 80s. Yes, I'm old. I'm 56 years old. I love trading, but let's face it, trading's a lonely endeavor. So why not, create a community of like-minded traders who want the same thing. We want financial freedom, one step, one trade at a time, and we can do it together and, have an environment that's a little more social. So I want to thank you for stopping by, and I would really appreciate it if you find this video useful in any way. Hit the like button, subscribe, help me get off the ground here. I have big plans. I am really fired up about this, and I appreciate you stopping by. So in the meantime, safe trading, and as they say, may the pips be with you. Until next time.